Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jairam Krishnamurthy, your morning brew of global financial update. Now, folks, we've been hearing a lot of updates on the trade front in the last few days, with varying stances by different nations. This week, we observed some action by the Indian government as well, reverting with levies on the US goods, while talks of being closer to the trade deal continue to persist. Following the similar lines, the positive set of trade updates led to a decline in the gold prices, breaking the $3200 barrier yesterday. So, JK, what do you think of these updates? We've been seeing a lot of activity in the financial markets. Currency is also having good volatility. Gold joining in the party. What's your take?
Hey, good morning, Shikhar. Yes, I think gold hogged the limelight yesterday, of course, for a different reason this time. Uh, there's a huge correction that has been happening in the gold, and yesterday there was a technical break at 3205 or 3200. Now we are down another $50 in Asian time. And this is nothing to do with the underlying trend being threatened. It is just a matter of correction because too many people owned too much of gold, and that correction was very much on the cards. What we have been looking for. So that probably will have some more distance, or perhaps it can even bottom out here because underlying interest from central banks will emerge sooner or later because overall dollar is going to be weaker. On the Indian front, the dollar rupee, in fact, failed to capitalize on the good news of the last few days, be it the local news or the international news on U.S. China trade or trade dispute diffusion. So rupee has been weakening. Couple of reasons could be cited for this. One is the inflows have somewhat uh, taken a back seat, and there has been talk of good outflows, and that's one point. And also, we are seeing some pickup in the yields in the US. The 10-year is trading well above 4.50 key level, and 30-year near about 5%. With there's a lot of talk about the U.S. budget facing difficulties and then leading to debt ceiling stalemate and all that. Yields have been going up everywhere. So it's a fear that there can be some sort of uh, a bond market turmoil, which in fact actually kept the other currencies also from gaining much. Chinese yuan is still holding around 7.20. So I think, of course, the ongoing uncertainty about the border situation also may be keeping the inflows in check for some time. This is why I see the rupee trading slightly on the weaker side, or I would say weaker end of the range. I would say not really weakened. And of course, if we do see a move towards 86, I expect the central bank could come and contain the weakness as well, because fundamentally rupee is not so weak. Yes, we did have the WPI also, which again confirmed that inflation is slowing down with help from several items of inflation coming off primary goods as well as the food inflation, all of them. However, whether RBI will take cues from the latest CPI and WPI and cut rate again in the coming meeting is something we would like to observe. Although market opinion is veering towards another cut, with the precedence on growth over inflation. So that is something that we'll have to wait and see for now. Overall, dollar, I think, probably dollar rupee shifting to a slightly higher range between 85 and 86, possibly based on the flow pattern. On the overseas dollar, not much movement. It's been ranging on the major currencies. One important news that the market or the currency players were watching was an indication in one of the news media that US is actually not pushing for a weaker dollar as a part of their trade negotiation. So this led to some stalling of the strengthening trend in some of the currencies, and even the euro gave back a bit of its gains, but nothing major. But this is something that even if my view is that even if the US is not pushing for a weaker dollar, their fundamentals of high deficit and high debt will mean that eventually they will have to sacrifice the strength in the dollar, and it will have to weaken. And moreover, if the bond market turmoil really erupts, then where will you find the buyer? It has to be only the central bank, and that means another QE, and that will lead to the dollar weakening in any case. Foreign buyers are not really so much in play right now. It is mostly the domestic investors that who have been subscribing to the new issuances by the Treasury. On the on the stock market, of course, there is some consolidation that's going on in the global market as well as in the Indian market after a very strong run that we have had, waiting for fresh triggers. Shikhar, one of the couple of news that is probably concerning also India is the fact that US is proposing a 5% tax on its outward remittances, and India is one of the largest beneficiary of remittances from the US as well as other countries, and must be a major chunk coming from US. So this is something which will not only hit the income earners but also the foreign exchange flow into India. It's not made into a bill yet, but it can become, so it can become a source of another friction, because US also receives a lot of remittances from their companies who are working in India, and also so this not in play right now, but market could be bit cautious about this, and also the fact that India is also proposing some reciprocal tariffs on some of the goods which US is supplying to India as a retaliation to the tariffs on aluminum and steel. So there are ongoing uncertainties which keep the dollar in a range, not really weakening nor seeing much of a strength. All focus is on precious metals. We have a lot of things to digest tonight: PPI, industrial production, retail sales, whether any of the recent tariff impacts these activities, particularly the consumption, is something that we want to see. And to top it all, we have a speech by Powell. Want to know his updated view on the monetary policy, if any, based on the latest developments on the trade talks and the inflation number that has been coming out. So markets are somewhat in a holding pattern, waiting for next triggers, and maybe tonight's data could be giving some clue as to where we are headed right now. Thank you.
Okay, JK, that was really good. And yes, folks, as of now, we're experiencing some sort of consolidation on the markets front, with the equity side showing more consolidation, and FX still continuing to have its fair bit of volatility. But primarily, the financial markets are looking out for new set of updates and new set of triggers for any directional action to happen. Having said that, as JK mentioned, the US fundamentals, or the US economy fundamentals, as well as the bond market concerns, may really push for dollar weakness, even though the authorities deny that they are actually deliberately pushing for US dollar weakness. One of the key interesting updates that we've been watching out is the proposition by the US of 5% tariffs on the outward remittances from US, and India being or India having a big amount of outward remittances from the US being received. It's a concerning factor over here on the Indian side. Having said that, we've seen rupee missing on the US depreciating party on the intensity front, but the direction was also observed, primarily on the lack of flows, or the slowing of flows being the reason. Lastly, we've seen gold having a huge move yesterday. Gold, although moved lower from the technical mark, as JK mentioned, of $3,200 per troy ounce, it is still looking like to be in a correction mode and not a change of trend. And a demand from central banks and market participants can make it move on the higher side again. That's it for today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for listening in.